In this video, we're going to talk about nature of price action, how to identify the direction of the market, and what are the technical aspects of channels. Today, we got to trade a very strong bearish sell-off, but market didn't provide us with a lot of easy high probability setups as you would normally have. And for that reason, this allows us to dive deeper into the technical aspects of the direction of the market and channels. Now, as you can see, today's session started with bearish structure. Now, you can see that I have this blue line on the chart. This is 21 bar exponential moving average. This is a supportive indicator only. Mainly, we are relying on reading the pure price action as these candlesticks are printing on the chart. So we can see that we have series of lower highs, lower lows. What we need to understand that in price action, every single movement is part of some pattern. So traders' goal is to identify a channel to make sure we got the market direction down right and we know where the prices may turn. And generally how we're going to identify the channel properly is we're going to look at the very start of the move and try to connect first couple of swings. First two swings will set the trend line, and third swing generally confirms the channel. So this right here is the swing that today's session started with. And this is the second major swing that produced a very strong and sharp sell-off. So if I'm just going to play around with it and look for a channel, connecting these first few swings, you can see how nicely I can find a channel here. I'm getting a third swing confirmation, so I'm just going to copy it, put it at the bottom, and this is nicely fitting downtrend. Now, the nature of a channel like this, and it's important to understand, is that every single channel has push phase and correction phase. Push phase is the move down in bearish downtrend. Correction phase follows. Correction phase generally ends at the top of the key entry point where all the smart traders are selling, and the push phase is starting again. And notice, once you reach the trend channel line, the push phase may end and the correction phase may start as well. And once again, correction phase may end at the top of the channel. This is why traders are trying to locate the proper channel, and you can see it's not random at all. There's a clear, distinct reason to price movement, and it is easily identifiable. Of course, it takes skill. Sometimes it's not that easy to find the proper channel, but important thing is that there's always some form of a pattern that the prices are following. The reason why are we talking about the push phase and correction phase is because once you see prices reaching the trend channel line, you expect a little bit stronger correction, okay? That doesn't mean that you're looking for longs. You're still looking for shorts. If you get a good short setup and the downtrend is strong, you still want to sell. But you cannot be as blind towards the bullish momentum while you're reaching the trend channel line and the correction phase is starting. For that reason, notice push phase ended, small little correction, push phase started. Push phase ended, small little correction, and the correction phase is ending here and the push phase is starting. For that reason, you don't want to be forcing any setups here. They're sketchy, doji signal bars. You're in the middle of this congestion. This is a trading range. You don't want to be trading these tight areas. You want to fade a breakout, but you can see we never really get a breakout. We have a stronger push to the upside. Another rule that trend lines are following is the trend line rule, which says after break of a channel, we expect new extreme to be formed. And here we have two conflicting patterns. We have this uptrend that has a break and needs to get new extreme, and we have this downtrend that has a break and needs to get new extreme as well. And by the way, notice in this bearish channel, the high probability setups are second attempts to sell. So you have second entry short here, not only at the trend line, but also at the resistance triple test. And we have failed second entry long because second entry long is going to be considered a trap if the structure is bearish downtrend. So it's a breakout pullback pattern of this smaller trading range. The support is acting as resistance alongside with the EMA. So what are we going to do about this pattern right here? As I'm watching this downtrend, the only thing that I'm keeping in back of my mind is for the most part expecting failed second entry long. We may get new extreme for this uptrend, we may not. That's particularly not my worry. That's not my problem. If we get new high, great, I'm still looking for failed second entry long. If we don't get a new high and we're below EMA, I'm still expecting failed second entry long. Why? Because the bigger pattern in price action takes precedence. Notice how tiny this correction is. Even though it is 7 bullish consecutive bars, it's meaningless compared to this big overall downtrend working rollover. So according to rules in price action, on a balance of probabilities, the bigger channel will overpower the smaller one. And we have new high, first entry long, pullback, second entry long failure. So here we have the failed second entry long that we expected, But notice how it formed on my chart. I can see that it formed as a doji, didn't really push below EMA, EMA getting a little bit flat, not the cleanest setup. This is a shame because context is perfect, and especially at the start of the day where you have no ambiguity about the channel, these setups are so reliable. I'm going to mark it even with red, not because it is a great setup to take the way it formed, because the context is good and you want to study this trade, that because the next time you get a great signal bar, you definitely want to take this setup. So make sure to study this. I didn't take it because it formed a little bit sketchy. I would mark it as aggressive setup, but it's a great setup to study because these ones are very reliable as you see them print on the chart. Now we have new extreme formed, but you can see another push down and a very strong sell-off again. And this was caused by the news. This is news announcement, very strong sell-off. And this leads me to believe that the bearish bias is a little bit stronger than expected. Because after you have a new low, you have another push to a new low and such a very strong push to a new extreme. That means that the structure is still bearish downtrend and is strong. So for that reason, I'm going to delete this channel and just see if I can find slightly wider pattern. If I'm going to connect these first few swings, I'm just going to extend it to here. You can see it still fits perfectly. So my channel is really not distorted at all. This is still a very reasonable channel. It's just a little bit wider, which is okay because I'm getting more information from the market that right now this is a very strong bearish sell-off. And you can go on a 10,000 tick chart to higher time frame to confirm your initial analysis. Now here we have overshoot. Now what overshoot leads to and what overshoot means. Overshoot is unnatural activity in the market, and this indicates oversold territory. You don't need no Bollinger Bands or RSI. You can really just see this based on pure price action, because take a look. Decent sell-off, decent correction, decent sell-off, decent correction, decent sell-off, and suddenly unnatural sell-off. 90-degree spike, news caused event, and very unnatural. For that reason, this is overshoot. An overshoot can lead to a break of a channel or possibly straight up reversal, which means we can expect a little bit stronger bullish momentum. Now, I even looked at it as a wider channel overall, because we can get a little bit stronger bearish downtrend, which we eventually did. Either way, I'm still focusing on the aspect of the push phase and correction phase. We still had very strong and overextended push phase, so we can have stronger bullish momentum in the opposite side. But we can see that we have no confirmation of this channel prior. But if I'm going to draw it a little bit higher, I can see that this makes sense because I have more confirmations here. Channel is a little bit tighter, and this acts more as an overshoot. For that reason, you can see how prices are suddenly correcting more and EMA is holding a little bit more. You can even see sideways EMA, smaller trend range. And this is important to take into consideration. Now I can also even, it's very common, measure the overshoot and see if I get measured break on the other side. And you can see you almost get measured break before prices will eventually reverse. Now, as we are watching this overshoot, I also want to talk about these lower highs. Now we didn't really get trigger below this bar right here, so there's technically no lower high. But I want to talk about the technical aspects of lower high during a structure like this. Generally, when we are unsure if the bearish bias is clean, if the bullish correction is weak and insignificant, we want to see trap, we want to see failed second entry long. So as I'm watching all of these lower highs, I don't really want to take them because I don't know how strong the overshoot will be. I don't know how many pushes higher it's going to make. How do I know that it's going to end here and not to make this initial push up? There's no way for me to know. Sometimes overshoot can keep pushing higher. For that reason, the only safe way for me to know that market ended this bullish momentum and the bearish downtrend is resuming is if I get bullish trap, a second entry long below EMA, failed second entry long. Now in this instance, we unfortunately never got it. We just have a very strong sell-off. But 80% of the time, you will almost always get a nice failed second entry long, just like you did here. First entry long, second entry long failure, first entry long, second entry long failure. But this time we didn't get it. So for that reason, when you're taking lower highs, just keep in mind that you want to make sure that the structure is easy to understand. The bullish correction is weak, minimal. Here we've been working to the upside basically for an hour. Notice we are working higher, we are working higher. So this lower high is way too late after bullish structure. So lower highs are generally after second entries. If it's a clear trend range without imbalance, lower highs are great. If it's a strong downtrend without significant bullish push, you can take lower high, but not like this. When you can see a little bit stronger bullish momentum, that's when I want to see a nice failed second entry long forming close to EMA, and it is the last bullish trap I want to talk about is the strength of the downtrend and this uptrend, because you may be tempted to draw wider pattern like this. And is this the proper way to approach it? Well, as you may already feel, it is not. We have very few confirmations. It is too wide and too flat. This would be a channel that we would use if the uptrend was the pattern for the day from the very beginning. But we traded down into the structure. The downtrend is much stronger. You can combine it with the high time frame to see 10,000 tick chart that the downtrend is truly the main pattern. And this is basically just visual. First leg here, pull back, kind of like a second leg. First leg, pull back, second leg. You can see it on high time frames. For that reason, this is very weak angle. The uptrend is too flat. I'm sticking to these channels and I'm just waiting for prices to end this overshoot. We're most likely not going to get reversal because the downtrend was strong. We're just going to break the channel. You can see, unfortunately, you have to sit here a long time without taking a high probability setup. Now, there are a couple of longs here that you may argue. This second entry long or even this one. Me personally, the way I trade, I always follow the main bias. Since the main bias is bearish, I don't want to overcomplicate my trading and I want to always stick to the main pattern, the main bias side. And I'm always looking to sell. But a more advanced trader, or if you just have different personality, you can make a case for a couple of these quick scalps to the upside because you can recognize the short momentum. That's absolutely okay. I'm just pointing out that me personally, I don't like overcomplicating anything. There's already enough variables to keep in mind in trading. So when I see bearish bias like this, basically I'm just letting the bullish correction play out and I'm just waiting for a good high probability setup to sell. But that's just me personally, how I like to approach the market. You may wonder, here we have felt second entry long here. Yes, but it is in the middle of this trend range. You don't know if the bullish correction truly played out. Just nothing is clean here. No good sell setup at this point. Failed breakout, very tempting because you have a static resistance. It looks like the last push up. It even looks like a first leg, second legs. But all of these setups are a little bit more advanced and more selective. But finally, you can see a very strong sell-off. At first, I'm drawing channel tight like this, but you can see consistent rejection. So I'm going to adapt to wider channel because we have a very strong downtrend overall. Now notice here we reached new low for this downtrend. This low has been exceeded by 1 or 2 ticks right here. So that means we expect correction or reversal, or the downtrend can continue if it was strong to begin with, which it was. We have new low, first entry short, second entry short. According to price action rules, if we get new extreme, taking a second entry is risky. You may get reversal pattern, you may get trapped. We don't want to take second entry. The setup that I wait, if I see EMA rejecting and I don't see reversal structure and the downtrend was strong, I need to see confirmation of the second entry short, lower high. Or in this instance, we get a failed second entry long, which can be basically treated the same way. So notice we have new low, first entry short, second entry short, which we don't want to take anyway because notice it's not fully at the EMA. So you have new extreme, it's not fully at the EMA, we're not interested. However, shortly after you get new high, first entry long, pull back, second entry long failure, that's the confirmation of the bearish momentum, of the second entry short, and even this smaller downtrend needs to get new extreme. So this right here is a great high probability setup, great single bar. I was a little bit greedy, I had my limit order a little bit up, and for that reason, I missed this setup and probably the only easy setup for the day. So you can see market continue working lower. I was expecting some trend range like this. I was not expecting to get continuation of the bearish momentum because now even this channel has a break new low. So all channels on my chart just reach new extreme. And you don't want to be too greedy, too overconfident that the downtrend is just going to go forever. So I was expecting a little bit stronger correction, but notice the trend range was absolutely negated. It didn't hold at all. You just get a bunch of first entries and market keeps pushing lower, and keeps pushing lower. Another correction, you would expect stronger one, and didn't happen. Another leg down. So it's starting to be obvious that the downtrend is continuing. No correction is significant. It basically strongly reverses back below EMA. Notice V-shape reversal down, no lower high, failed second entry long, V-shape reversal down to the bottom. So once you see multiple major highs reversing down, that's when you're going to start to look for a little bit stronger downtrend, because this channel is just not enough. Okay, you keep creating multiple pushes to your extreme. So as you can see, this looks like a spike and kind of like a channel working lower. You spike down, you're working lower, because if I'm going to look for not spike on a channel and why the channel like this, I basically don't get any swing confirmation. I only get 2 swings, no 3 swing confirmation. So this right here is the proper pattern. I'm just going to copy it, put it at the bottom. Oops, I'm just going to delete it. And you can see you can predict this second entry short. Now this is very advanced to take. You can also see that you have a triple top, smaller trend range. You have a break and new extreme for this uptrend, and you have new low, first entry short, second entry short. And 2 key entry points are merging here. The resistance and this trend line that just now is getting confirmed. I'm going to mark it. I was on my break. It's definitely more advanced, but it is following the price action and the price action rules because the context is bearish. You have 2 key entry points. The uptrend played out and is a second entry short. Now the market continued pushing lower. You can see we have overshoot, but it was so tiny I extended it a little bit. And as you can see, eventually you get another push here. So I get confirmation here, but I get another overshoot. And you can see that we already moved quite a bit down. And this is where your instinct will kick in, that you're a little bit flustered for not taking a lot of setups, because today, despite the fact that we have a very strong sell-off, very few setups, basically no good setup here. If you miss this setup, the only great setup, you pretty much are left completely dry. So traders will start forcing setups and they will bend the market to their will, but the market doesn't care about us at all. And just because you didn't take a setup, the market doesn't take this into consideration. It basically doesn't care. A lot of times traders will completely disregard how the market is behaving, that you move so far down for such a long time, the trend is starting to be a little bit overextended. You even have a little overshoot here. There's eventually time for some profit taking, for some bulls to pick bottom and start buying. And you can see that this is exactly what is happening. You can see, notice, EMA is suddenly rejecting and not a single candle is managing to stay below EMA significantly. And compare this correction, how EMA keeps holding every single time, to this. EMA is not holding, sell off. 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 Here, notice EMA is holding once again significantly. That's because the overshoot. Prior to this, EMA is not holding, sell off. And EMA is basically not holding because it's getting rejected. So you can see that suddenly these corrections have V-shaped reversals, and now we can see continuous bullish momentum. We can see that the prices confirmed the channel again. Strong push below EMA, first entry long, which we don't have a trigger below lower high, but at this instance, we would not want to see a lower high because we have the continuous bullish momentum. And we have a failed second entry long, but notice once again, 1, 2, 3, 4, 5 bars stacked even in all these bars, quite aggressive. I will mark it as aggressive, but just nothing formed that clean. At least the single bar is pretty good. And then you can see small little support being formed here, EMA getting flat, and the market completely lost steam because it's about to get close. We don't want to be trading this late regardless. We didn't really go bar by bar as we normally do. There really weren't that many great setups, but I hope you find the technical aspect overall quite useful, because it is pretty much how price action likes to move. And remember here, bigger pattern generally takes precedence over the small one, especially if you have the first trend for the day to start with, where you don't have multiple conflicting patterns. So I'm going to wrap it up and I'm going to see you guys in the next one. Take care, everybody.